Hi there, this is routine weekly traffic light update for the week ended on February 3rd, 2017. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation point are the results of a proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here is the agenda we'll go over. We'll review the traffic lights of the S&P 500, Dow Jones, Nasdaq Composite, and we'll look for bearish and bullish trades. Here is traffic light S&P 500 as of February 3rd, 2017. Let's go over the legend first. The x-axis is the time. From the oldest is on the left, the current is on the right. Y-axis here represents the daily close of S&P 500 ETF SPY. The blue line represents the daily close of the S&P 500. The green line is the proprietary traffic light S&P 500. The horizontal red and the purple, these two lines apply to traffic light, the green line. The red line is a long-term conservative line. Whenever the green line crosses over the red line successfully, it is better to take a long-term conservative position. The purple line is a long-term position indicator. When the green line crosses the purple line and crosses back down, it is usually a sign that you can take a large long-term positions. Currently, the traffic light is showing less risk because it has descended to the green zone. Monitoring is still required because sometimes the green line will just shot straight up and the major correction follows. From the clip in November 18th, we compare the current situation to that of mid-2012. In the 2012 period, as the index attempts to reach a new high, break the old resistance level, there were pullbacks, and each pullback is less severe than the previous one to keep the bullish intact. Let's observe whether the current market followed a similar trace. I just like to point out that in 2012 period, the PE ratio of S&P 500 is from 14 to 15. The current PE ratio is about 25 to 26. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the bullish red line and bearish green line cross over and showing divergence. In the 2010 period, when the red line continues to make a new high, while the green line stays below at a near very low level, the market ascends. Despite the pullback, the market ascends forward. In the 2011 period, as the index makes a new high, the red line does not, and the green line starts creeping up. This eventually led to a longer correction. Let's look at the current situation. The red line starts to descend from the resistance point, and the green line continues to its descent. So overall, the bullish trend is intact. Here are some bearish and bullish views. On the bearish side, there are 2 points. First of all, the red line continues descent, and there's a potential divergence because as the Dow made a new high, the index does not. But the bullish side is that the green line continues descent, and the red line descent comes to a halt. Looks like it's about to turn, but we need to observe it for 1 more week. We can see the similar things in traffic light Nasdaq. As you can see, traffic light Nasdaq made a new high recently, all-time high in the past 11 years. In April 2010, when this type of thing happened, or May 2013, the market had a pullback. In 2010, it took longer, while the pullback in 2013 is shorter. I will zoom in the mentioned period in the next slide. In both situations, the index starts to descend when the red line starts to flat out. The bullish trend restarted after the cap on S&P 500 occurred or the red line starts to ascend again. In 2010, cap on S&P 500 did happen. Actually, one day 2, one day 18, one day 4. If you desire to know more about S&P 500 capital appreciation point, you have the privilege to access the Starter A servers for free during the trial period. Here are some bullish and bearish observations on traffic light Nasdaq. On the bullish side, the Nasdaq made a new high, so did the red line. Second, the red line comes to a halt. It starts turning, and there's one more point, the green line is ascending. On the bearish side, we notice that the red line has been ascending, and this particular trend has not changed direction yet. Here's this week's summary. Traffic light S&P 500 is in green and shows more long-term bullish sign. Traffic light Dow and Nasdaq show some intermediate bearish sign. Traffic light Dow and Nasdaq descending red line are pausing prior to supporting one level. With unsynchronized bullish and bearish trades, the market tends to consolidate. S&P 500 might happen before starting a strong bullish trend. Thank you for listening.